back.
Thank you very much. The gentleman from Colorado, Mr. Perlmutter, is recognized for 5 minutes.
Mr. Secretary, good to see you. I'm over here. My questions are going to go back towards that repos, the repurchases, because there are some flags here. And, you know, last year, banks had the most profits they've had in forever, in part because of the big tax cuts and stuff like that, but huge profits. And at the same time, we saw the excess reserves of the banks decline by 35% since 2017. And at the same time, as the Fed and Treasury were sort of shrinking the balance sheet, all of a sudden over the last few months have had to expand it again. I don't understand how those all come together. And if you could try explaining it again, I'd appreciate it, because we got big profits, shrinking reserves, and now expansion of the balance sheet again. Those are the kinds of things that I think we have FSOC in place to monitor. So what is it that is really driving this on a bigger scale, if you could tell us?
So I'm happy to address it again, because it is a very important issue, and I don't want to minimize it. And again, as recently as yesterday at FSOC, we had a presentation from the Federal Reserve Bank of New York. I think there's a lot of different issues that came together on those 2 days that caused the spike. It was not any one single issue, but we are studying it carefully to make sure that this doesn't occur again, and to make sure it doesn't occur on a prolonged basis. The banks are having very good profits, mainly because of the U.S. economy is performing very well. I don't think this has to do with an issue of bank profits. This has to do with an issue of bank liquidity. The banks had plenty of liquidity. So the banks had enough liquidity to go in and take up the repo, but they didn't want to do it. And the reason they didn't want to do it had to do with different regulatory tests that fit together. So it wasn't, the liquidity test was fine. It was different ratios that they were worried about hitting and tripping. So again, this was partially a Treasury issue of tax day. It was partially a regulatory issue. It was partially a reserves issue. And then just to comment, as you said, the Fed has been shrinking the balance sheet, which I think makes sense, because as they went out of quantitative easing, they didn't need a giant. That was for the financial crisis. And what they're doing now doesn't impact the growth of the balance sheet by buying securities. It's really a cash management function around the repo markets. But these are all very complicated issues that were intertwined, and we continue to work.
Well, but those were sort of the things that led up to the recession 10 years ago. That all of a sudden there was this illiquid setting of our banks. And then everybody started getting nervous, and the auction rate securities went to heck, and everything else started closing in. And I guess it just doesn't add up for me. We're making money over here, but we're shrinking, but all of a sudden the reserves are shrinking like crazy. We try to shrink the balance sheet, but now we're expanding it again, and it isn't just 2 days. It's been happening for several months now.
Again, I can assure you that the technical issues that happen around this have nothing to do with the financial crisis. The financial crisis was driven primarily by real losses, okay, in real estate markets and highly leveraged securities. This is all about the government repo market. And again, when we talk about the reserves at the bank, the excess reserves, most of those excess reserves are locked up at the Fed because of regulations that require the banks to have so much excess liquidity.
But let me slow you down for a second, because I asked my staff to just kind of give me some numbers on student loans, on auto loans, and on corporate debt. I mean, we're at $1.6 trillion in student loans. 44 million Americans have student loans, 29, almost 30,000 the average debt. Auto loans, we're at 1.26 trillion. 107 million Americans have auto loans. 7 million Americans are more than 3 months behind. And corporate debt, we're at 10 trillion 1.3 trillion in leveraged loans, 1.2 trillion in junk bonds. I mean, there's a lot of lending going on out there. And so the question is, are we getting overextended again? And that's what I'm worried about.
The gentleman from Colorado, Mr. Tipton, is recognized for 5 minutes.
Ms. Secretary, did you want to answer that?
Thank you. What I was just going to comment on is I think it's a good thing that we have a lot of lending, a healthy economy. And again, I really do think that this bank issue is a highly technical issue, but it is something we are very focused on. And student loans, that's a longer subject that we're studying carefully. We share certain concerns on the student loan market right now.